Warning, buying leads could be the biggest mistake of your loan officer career. And I know that sounds crazy coming from someone that helps loan officers generate leads for a living, but in this video, I'm going to give you 5 compelling reasons why you shouldn't buy leads as a loan officer. And I'm also gonna give you 3 reasons why maybe you should. So the first reason is you don't have a systematic lead conversion process that is mapped out, nor have you thought about a different process than what you do with your referrals. Studies show that calling leads within 5 minutes versus 30 minutes can 100 times your contact rate, and that calling a minimum of 6 times will exponentially increase your contact rate. So why is it that most loan officers think that calling leads twice is an acceptable lead conversion strategy? And when prospects don't answer after 2 to 3 calls, they call them tire kickers and write them off. That's just not how direct-to-consumer leads work. Texting and emailing won't cut it with direct-to-consumer. You need to pick up the phone and call the leads. If you're uncomfortable with picking up the phone to call strangers, calling leads is probably not for you. No matter how much you warm them up, they are still cold strangers that don't know who you are. So it's up to you to build that know, like, and trust, turn them into fans, and convert them into actual prospects that want to buy. Reason number 2 is you are looking for a savior for your business. Here's the truth. Converting online leads is not easy. And if you're struggling to grow your business with referrals, with organic traffic, chances are it will also be tough for you to have the necessary skills to convert online leads. Working leads is a fundamentally different way of doing business, and some loan officers just don't have the sales ability nor the mental fortitude to put up with constant rejection, and that's okay. That's totally okay. Working leads is not for everyone. The third reason why you shouldn't buy leads as a loan officer is because you're looking for an instant return and only want to work with prospects ready to buy in 90 days or less. So going direct to consumer is not a get rich quick scheme. Most of the time, direct to consumer leads are higher in the funnel, and that's not to say you won't find people that are actively buying, but for the most part, they're less likely to convert right away. So let's think about the buyer's journey. The buyer decision-making process is a lot of times somewhere between 6 and 27 months. People don't just wake up in the morning and decide to buy a home. They see a queue, like Susie buying a home and posting it on social media. And then they start asking around. Maybe they ask their parents. Maybe they talk to Susie who just bought the home. Then they start looking at homes on Zillow. Maybe they start researching their options, start saving for a down payment. They start doing all these things. This is a long-term sales cycle. People don't wake up in the morning and buy a $400,000 or $500,000 house. They wake up in the morning, see something that's going to trigger them, and then they start the process. One of the things that real estate agents do much better than LOs is they nurture their prospects through the buying cycle. And that's why when they get to loan officers, most of the time from referrals, they're ready to buy within the next 60 to 90 days because the real estate agent has already taken them through the entire journey, has already nurtured them, has sent them listings, has gotten them excited about the home buying process, and then they're ready to apply for a loan. The fourth reason why you shouldn't buy leads if you're a loan officer is if you think that sending an online application to prospects is going to be an acceptable conversion strategy. These are not warm leads. They are not referrals. They do not know, like, or trust you. And so sending an online application to a stranger is the worst way that you can convert them. Honestly, in my opinion, the online application is one of the worst things to happen in the mortgage industry. Not because of the tool itself, but because of the habits that it has created in loan officers. I know it's a hot take, but honestly, in my opinion, the online application is one of the worst things to happen to the mortgage industry. I know that sounds crazy, but hear me out here real quick. It's bad because what it has done, it's created a lot of bad habits in loan officers. Loan officers think that strangers should be willing to fill out a super long application before they even talk to the loan officers, or with only about a 15-minute conversation. That is crazy. Assuming that consumers are tire kickers if they don't complete an online application before speaking to the loan officer is asinine. Running a proper discovery call is key to uncover motivation, pain points, and goals, which can then be used to create urgency to complete the online application. Honestly, I actually recommend taking it over the phone conversationally, but it can be done digitally if done correctly. The truth is, if you talk to most top producing loan officers, they run an extensive discovery conversation, usually 30 to 60 minutes, where they are building rapport, building trust, and understanding the actual buyer's intent, what their pain points are, what they're looking to accomplish, what their future goals are. They're finding out if they have dogs, if they have kids. They're finding out everything about them so they can build relationships, so they can capture those future transactions. And reason number 5 is you only want to work with A-paper buyers. What you're going to find out is with online leads, with any types of leads, there will be some people that are A-paper buyers, but that is not typically the norm, and you need to be prepared to provide solutions. You're a loan officer, you're a solution provider. You need to have access to down payment assistance, credit repair, other products, VA, FHA, conventional. Learn the guidelines, learn the products, and provide solutions. Because the truth is, you're a salesperson, and sales is providing solutions to problems. Uncover their problem and provide a solution. If you don't have the solution, that's totally fine. Point them in the direction that they need to go in order to achieve the thing that you want them to do, which is ultimately buy a home with you. All right, so those are the 5 reasons why you as a loan officer should not consider buying leads. And if you have a different mindset and you understand that it takes time to nurture prospects, and here's 3 reasons why maybe you should think about buying leads or going direct to consumer with your marketing. The first reason is leverage. The average loan officer has never referred their agent partners a deal. And over again, I see agents in Facebook groups saying that loan officers never give them deals back. And time again, I see that loan officers say, well, the consumer goes to the agent first. And while that tends to be true, the one key reason they do that is because agents actually market direct to consumer, whereas most loan officers only market to agents. Let's think about it for a second. When a real estate agent becomes a real estate agent, their broker goes and tells them to work their sphere of influence. When a loan officer becomes a loan officer and goes to work for a branch manager or a broker, they are typically told, go work agent. So why would the consumer go to the loan officer first if loan officers do not market directly to the consumer? And studies show that over 50% of consumers work with the first loan officer and agent that they talk to. And leads and pre-approvals are the ultimate leverage point when it comes to creating new partnerships, and new partnerships don't include just agents. You should be asking every client if they have a financial advisor, a CPA. These are people that you can give leads to, but not only to your agents, but also to other referral partners. And that will help you build up goodwill and invoke the law of reciprocity. The second reason why maybe you should consider buying leads or going direct to consumer as a loan officer is because of lifetime value. Most loan officers don't understand that, and they've never been taught what it looks like. So according to a monitor-based stat, the average homebuyer buys every 11 years. In that 11-year span of time, most homebuyers are also refinancing twice. This means that in 11 years, the average consumer does 4 transactions. And unfortunately, according to the same study and the same data, the average loan officer only retains 19% of those consumers, and they do a transaction with another loan officer. So understanding lifetime value and building a business built on working your past database will allow you to think about investing in consumer direct in a different light. We're in the business of acquiring databases that we can market to. So stop thinking about the next 90 days and start thinking about the next 10 or 12 or 20 years. The third key reason why maybe you should consider going direct to consumer and buying leads. Most loan officers are dependent on a handful of agents. In markets that are good, like 2020 and 21, and even normal markets, that may be sufficient to feed you. But in down markets like 2022 and 23 and even 2024, depending on maybe 4, 5, 6, 10 agents is scary and not predictable. The average real estate agent and loan officer are down somewhere between 40 and 60% in this market. But once you have a systemized direct consumer client acquisition strategy, you can actually understand and pretty predictably know how many leads you're gonna receive. And if you have a systematic way to convert them, you will actually typically know how many you're gonna convert and how many leads and closed deals it's gonna be. This isn't to say that you should put all of your eggs in one basket. Direct to consumer should really make up maybe 10 to 30% of your business and should be used primarily as a leverage point to gain more referrals and also as a pipeline and database builder for playing the long game. So if you are the loan officer that maybe is looking to get into direct to consumer marketing and are looking to buy some leads, then you need to know more, right? This is not a simple process. There are some secrets, some strategies, some tips that will help you double your conversion. So I put together a video on the scripts, the processes, the follow-up systems, and everything that you need to double your conversion with online leads or really any type of leads. And that video is right here. Go ahead and click on it, watch that video. It's gonna help you with scripts, exactly how to follow up with people. It has objection handlers, really everything you need to know to convert leads at a high level and double your conversion rate with online leads. And thank you so much for watching and have a great day.